It's UPBOptionMillionaires.com. It's the weekend, February 25th, 2017. Dow Jones Industrial Average. Yesterday, meandering around, we were in negative territory. That 10-day winning streak for the Dow Jones Industrial Average, yes, like a baseball team, was in jeopardy. Oh no, get the closer in. And if you look late in the trading session, we did. Look at this. It was hit. It was going, folks. It was going, gone. Dow Jones Industrial Average gets into positive territory, closing for the 11th consecutive session in positive territory. Something the market hasn't seen since 1992, 25 years ago. Dow Jones Industrial Average momentum remains to the upside. I know everybody wants to cry and complain about central banks, massive balance sheets, all of the, massive policies they've been putting in place that are just going to come blowing up in everyone's face. But the bottom line is the market keeps heading higher. And those fighting the gravitational pull, the inverted gravitational pull, this is, you would say we're climbing up a mountain. No, it's, if you flip this around, the market's really rolling downhill in an inverted fashion, if that means anything at all. But anyone fighting this move has been just torched. One of the trades of the year, 2017, by one of the widely followed market pundits was short QQQ. Short it! Yeah, because it's, you know why it's going to go down? Because it's up so much. Well, that's a great excuse to short the market. Yeah. Short this market, it's gone up so much, and it just keeps going up so much and so much and so much. So if you look to start 2017, look what it's done. I mean, nary a red candle here for the QQQ, right? Short the QQQ. There's laughter, I think, as the market goes up. There's kind of a laughter at all the pundits. But again, when you look at a market that continues to go up and say to yourself, well, I'm going to short it because it's got to fall sometime. Well, it will. And we were right along there with the bears. But for now, you got to trade with where the market's going. And this action is eerily reminiscent of what we've seen really since the market started to rally. If you go back in 2009, Barack Hussein Obama, we're getting to that anniversary. It was March 4th, 2009. He said it was a great time to be long the stock market. He could not have been more right. Barack Hussein Obama nailed it. And we're still going, even after he's left office. So, yeah, he went long the market when Barack Hussein Obama said, buy the market. He's been spot on. And you want to blame the central banks around the world buying ETFs, the ECB buying junk bonds. The writing's been on the wall. Ben Bernanke himself, as much as you despise him, possibly because you've been short this market, he himself has said he's going to reinflate asset prices. So the Federal Reserve continues to do that. And the market continues to hit new highs. What's not hitting new highs? The VIX. And we continue to watch this as well. It did paint single digits a couple weeks ago. I think it's going to hit single digits here in 2017 for good. And before we bounce, and then that market inevitably will crash in 2017 because it didn't in 2016, 15, 14, 13, 12, 11, 10. But if you look yesterday, and the VIX continues to be a great intraday indicator. We had that paint right out of the gate yesterday. Ultimately, the market, not only did it come down to meet that paint, we've seen these fat finger paints, but went below it. And if you look, as the Dow Jones Industrial Average, S&P 500 was chopping around in negative territory, the VIX was getting melted down, was getting smacked down. And that was the indicator that the market was going to move up late in the trading session. And we've seen a lot of the morning weakness turn into afternoon strength as this market kind of gives that rope-a-dope. We call it buy the dip, whatever you want to call it the rope-a-dope. Kind of gets itself beat up a little bit in the morning and then comes back like, was just playing pretend there. So if you look, the VIX lower, and I think heading into the next couple of weeks, we're going to see the US dollar continue to rise, which I think is going to be great for keeping inflation under control. You think all of the policies that Trump wants to put out there are going to be somewhat inflationary, but I think the stronger US dollar is going to kind of keep a lid on inflation. Guess what that means? The US dollar index continues to rally off that 100 level, still off its 103 level at the start of the year, but I do think it's going to come back to that. And then, as I've been talking about for a long time, we're going to break out the highs that we haven't seen since the internet bubble in 2000, which means we're going to get up to 105, 110. And guess what's going to happen as US dollar rises in value? Gold! Gold, which has been breaking out to start the year, is going to head back down into the 700s and 800s. That's going to happen over the next couple of years. So those gold bugs will continue to be wrong. As gold falls, you see a nice little bounce to start the year. Yeah, good job. We had a great bounce to start 2016 as well. But I think ultimately the stronger dollar is going to take gold down. Under 1,000. Hopefully they don't take Bering Sea gold off. That's a great program. I like to see them go out and suck up sand to find little gold dust nuggets and stuff out in the Bering Sea. Let's go into some earnings trades. Earnings are coming up. Some charts I really like here. EBIX. EBIX reports earnings, I believe, on Wednesdays, the 28th, whatever date it is, 25th, 26th, Tuesday. And if you look, a nice long-term flagging pattern here. We had a lot of breakouts out of a similar pattern in 2015 and 2016. I think it's going to break to the upside. The company just announced a big buyback that at current market price would amount to almost 8% of the outstanding shares. They've reduced their outstanding shares by 20% the last couple of years. There's a big short interest in the stock. I think the float, 26% of the float, 18% of the OS is in the hands of short sellers. And this is a stock that trades 100,000 shares a day, possibly a little more, depending on the action. But if you look, they have almost 6 million shares short. That's a pretty amazing number. And you're seeing a lot of call action. The March 60 calls I have, that's what you're seeing in the action is possibly these shorts trying to protect themselves from a possible looming move to all-time record high. So EBIX calls like that, earnings reports coming out, I think it's going to be good, and that's going to help propel the stock to new highs. Target, look at this chart, down to support here. I know we've seen some of the retailers get hammered after the earnings report. I think Target here is going to bounce, and it's going to be a big, nice, sharp candle to the upside. Possibly eventually in the next couple months getting up to the top of this channel here and maybe breaking out to record highs, which would kind of fly in the face of what we're seeing with some of the other retailers. Let's just bring up Walmart real quick because that one actually looks pretty good here. You can see the breakout we have. Walmart looks like it's going to head up to 80, and that might be somewhat of a sympathy play if Target has good earnings. CRM reporting, this is some sort of a topping pattern perhaps. I mean, the neck's a little small, but we do have some sort of a left shoulder. We have the high as the head, and the right shoulder, we haven't gotten up to that high 80s range yet, so possible setup to support there for CRM. They report earnings this week. A couple other stocks, and look at Domino's Pizza. Now, if you look, Papa John's reported earnings. The only reason why I would get in the way of this earnings report, I know there was an analyst came out and said things are looking great for Domino's Pizza. They're expecting better than expected earnings. If I said that right. But you look, Domino's Pizza to new all-time record highs the last couple weeks. But when Papa John's reported earnings, it kind of came down a couple percent, but it's recovered a lot of those losses. This move to the upside has been fueled by the company has done 2 recapitalizations, almost like a penny stock, except it's not. Share recapitalization, you want to look at that. In the dictionary, it basically refers to corporations that are trying to finance themselves, and it's not really referring to corporations that are, structurally sound. And so what Domino's Pizza has done in the past is when they have debt coming due, it's almost like they take a home equity loan. They have a house, which is their company, and they use that to back additional debt. And some of the debt they use to pay off the existing debt they have. And the rest of that debt they use to give a special dividend to their shareholders to buy back more stock. And that's what Domino's Pizza's done. And what's going to happen in the next couple of years, that home equity loan's got this giant balloon payment that's coming due. And if we see interest rates start to rise, which I think is going to happen, that balloon payment to refinance it is going to require more capital. And I think that's when kind of the music starts to slow down a little bit on the Domino's Pizza, prefabricated pizza crust bubble. So that's something to watch for. Is it going to happen this earnings report? I don't know. When you see Papa John's pull back, that's what happens. When the growth story starts to lose its luster and the growth doesn't justify this 1,000% move to the upside, that's when the brakes are going to hit, and you're going to see this cataclysmic decline back to $100 for Domino's Pizza. Maybe that's this earnings report might be worth a lotto trade to the downside, 170 puts. So that's something I'm looking for. Domino's Pizza, longer term, this is going to be a huge short potential opportunity. And let's get up one more chart here before we call it a weekend. AutoZone. Look at this beautiful, similar to Target. I know Amazon's getting into the business, auto parts, but AutoZone, the chart looks good. This is a corporation that is well run. They're still expanding. The chart clearly shows, the upside potential here. We were flagging back in 2012, 2013, much the way we are now. And look, we came down to support, much like we are now. And then we had a beautiful 4-month, 5-month rally to the upside. So 4 or 5 month rally gets us up to 800. Maybe it'll be a little sooner because we had these big candles to the downside. So possible call trade for AutoZone, earnings coming up. And one last chart I want to bring up, the financials, because I talk about the breakout we have in this market. Look at the financials. Hello, financials, XLF. Just to bring it up, the breakout here we have out of this wonderful bull flag. Look at this, kind of flagging a little bit out of the bull flag, flagging out of the flag. So looking for upside. Financials going to help lift the market to new all-time record highs. That sounds like just you could copy and paste that. New all-time record highs. And we pretty much have in the chat room at optionmillionaires.com. Hope to see you there at UPB. Everyone have a great weekend. Earnings still coming out this week. Love the EBIX. Love me some Target. I'll see you.